Hi all, right, hello there, good morning. This is Chapter 6. Chapter 6 isn't really a chapter, it's just an introduction. So Chapter 6 is an introduction to what's referred to as the extended trial balance. Now you remember that we got our trial balance from all the brought down figures, or if you like, the trial balance fundamentally, if you remember, is a way of arithmetically checking that all the debits are equal to all the credits. Think of it like the gateway. It's sort of saying, listen, if you've checked everything, let's add up all the debits and all the credits. And if all the debits and all the credits are fine, then we can now proceed to prepare the profit and loss and the statement of financial position. What it's also saying is that if they're not balanced, then there's some errors there. And even if it's balanced, it's actually quite possible for us to still have errors in there as well, but we'll discuss those when we come to those type of errors later on. So this is typically how you would do this. You'll have your trial balance, and let's just go to a new page. So for example, you would have, just get a new page, you would have something like, you know the trial balance already. You would have, say, for example, I don't know, capital, I'm just making things up, capital, machinery, trade receivables, and trade payables. Let me make these up. So you would have debits, and you have credits here. So capital, you might have 50,000, machinery, you might have 20,000, trade receivables, you might have 60,000, and therefore trade payables will be 10,000. And then that's what will be done. You'd be like, sorry, this is 60, so sorry, this is 60, 20, so let's make this 30 because they balance 80,000, 80,000, and then we'll be fine. And then typically what used to happen is you would then kind of start preparing the income statement and the balance sheet as we know it. But that's not actually what happens. I mean, let me put it this way. What bookkeepers have done and what accountants have done, thanks to Excel and thanks to all these new programs, if you like, is to just have something that adjusts your starting trial balance as you go along, so you can almost see what the beginning and the end would be. So almost like working between two trial balances. So in your textbook, if you quickly please turn very quickly, I mean it's not going to take a long time, the page 156 of your textbook, you'll have something that looks like this. You'll have trial balance, you'll have all your debits and credits, and then you have what we call adjustments. So kind of everything that's happening in the year can pretty much go in these adjustments, kind of like, and that's a debit and a credit. So I'll give you an example in a second. So, and then here you'll have what we call the statement of profit and loss and the statement of financial position. So you can already see that the trial balance can be debit and credit and debit and credit. You can see that we can start off, if you like, with, say, capital of, say, 10,000, and then say bank of 10,000. I'm just going to use a different color now. And say, for example, during the year you added some more capital into this business of 5,000. Well, your trial balance would look like this. Adjustment 5,000, adjustment 5,000. I mean, that's the journal. More money has gone in. And we know that neither of these events, these are both assets. This is a liability and this is an asset. So neither of these two things affect the income statement of the statement of profit and loss, but they come here. And so your new statement of financial position for capital is 15,000 and for bank is 15,000. So you can see the premise. The idea is you have the adjustment. It hits this is what you started with, and then it goes through, it feeds through. So let's do another one. So for example, sales. So you have sales of 15,000, and you have trade receivables of 15,000, right? And then you make some more sales, say of another 5,000, and then you have trade receivables of 5,000. So we know, of course, in our statement of profit or loss as well, we have 5,000 here, and then what we also have here in our bank, if you like, is 5,000 as well, if you like, because your trade receivables has increased by 5,000. So you can see the point really is that the effect, as long as we have the effect, we just need to find out, we just need to know, we'll do this again. This is the very last chapter. The question is, where is the end effect, or what has been affected? If it's an asset, we will see the effect in the statement of profit and loss. If it's either I or E, we will see the effect in the statement of profit or loss. If it's an asset or liability or drawings, we will see the effect in the statement of financial position. Great, and that's pretty much fundamentally Chapter 6. It's just an introduction, and we'll come to that right at the end of our program. Okay, great stuff. That's Chapter 6 done.